days after a long liquidation. So I'm not exactly certain that the old pattern is broken when we're opening up and driving. I do know that when there's a topping process, that the topping process takes a while. We generally just don't simply roll over to the downside. I can't emphasize that enough, that what happens initially is people get very bearish very quickly. They press at the lows and they get horribly pressed back up to the highs. And I actually would like to demonstrate what that looks like for everyone quickly so that you have a clear understanding what I'm talking about. So hold on one second here. I'll go back to so, and I don't quite have the data yet, so when I pull up, I'm going to give it a minute to pull the data. Looks like they're running just a little bit slow on TradeStation. That's fine. So let's go to this, and I'm going to show you what the gold, before we're done, I'm going to show you what the gold market looked like when it rolled over and exactly how long it actually took to roll over. Here we go. This should give me what I have. There we go. Squeeze this all together. Let's just go to a bigger time frame. And it'll pull it up when it has it up. Oh, there we go. Okay, finally, it took forever, but this is what I wanted to show y'all. This is on a very large time frame. This is the breakdown and quote crash in gold. So from the time it hit a peak in October of 11, right? If you'll notice, look how many times it snapped back up to the upside and how many head fakes it had from the time it was done here. These are multiple huge monster snaps that it had to the upside. Notice the trend was down, but notice how big the snaps were all the way until the first time it had to break where it really started getting easy to short was all the way over here in February of 13. Okay, it took a long time to get from February of, let's see, this is March 13, February 13, December, September, okay, all the way to April before it actually got easy to the short side repeatedly. Look how much bigger the legs, even the legs down, right, were more difficult to the downside until we got all the way over to February. It took months, in other words. We just hit a peak. If this was a similar chart on ES, we just did this a couple of weeks ago, not even a week ago. This is where we would be at. And you'll notice these snapbacks, if you actually make this larger and you look at it a little bit closer, what you'll see is that these snapbacks were quite brutal initially. And to demonstrate that, right here in this period, even when we weren't up at 1700, this is before we'd even hit that. Hold on one second here. There we go. 1800. There you go. You'll see these snapbacks to the upside were quite brutal and fast. Okay, that's what happens when the market tops. Is it does this process, and it doesn't go anywhere really quick. As you can see, we basically traded sideways for almost a full month and a half. Okay, so even if you're bearish and you're expecting a roll to the downside, don't get overly bearish too quickly. It takes time to develop a downside market. That's the only point I wanted to go over. If you want to take a look at it, take a look at the gold market. It's the best example of a market that crashed and still took a damn long time to do it. So let's go back over here real quick. Today's summary. I'm going to get my drawing tools since they're not up. Okay, here we go. Okay, so we are currently trading right in the middle of yesterday's range. This 1845.50, excuse me, just above it, 1845.50, right here. This is Globex low right here. and Globex high is sitting right underneath Thursday's high. Okay, so if we stretch that out, the first thing we need to see to have upside today, right, because everyone's expecting it, is you have to put in your mind, we have to get above 1848 and a quarter. If we don't get above 1848 and a quarter, and probably relatively in the first 2 hours, right, you have to think initially balance, right? I'd go for 2 days of balance, right? But if I don't see us above 1848 and a quarter, I'm not very concerned about trending, even if we have a strong open, has to get above this point. So if we eliminate this point, in other words, we can't get above this 1848 and a quarter, the next option I'm going to first is a balance day, right? Which would mean we'd simply trade in a range somewhere probably between Thursday's low and Thursday's high, right? That would be actually my first choice in terms of possible scenarios. What would change this scenario is trading above 1848 and a quarter, right? That opens the door for a possible range extension. I don't think we'll have a trend day up. We could, but I don't think we will. It opens for a possible range extension. If we were going to have a super big range extension, or actually this will end up being a trend day up, right? This area from here to here would be my eventual target, a potential point of a reversal, right? Because you got to remember we've had quite volatile days. We could easily get up here and then get back down here, right? This is this area right here is marked because it's approximately 50 to 60% from the swing high to the swing low. It's not a magical area. It doesn't automatically get rejected. We quite often trade above it. Sometimes we trade right into it and reject. Sometimes we trade just above it and reject. But I can tell you that for traders who are looking to get short, if there are traders that are looking to get short, they are circled in this area and waiting for it to get up here to put positions on. Professional traders are. So this would be an area I'm definitely looking to launch extensions. What that means for me is if we get up here and I take a short, I'm going to leave a pretty good chunk of my additional contracts that I don't scale at 2 points, right? To see if I can get an extension back down to the downside, right? Also may launch some options calls from here. Again, I'm not bearish, but I expect a reaction out of this area, and I expect responsive sellers in one of these two areas. It doesn't have to go that way, right? But I expect it at any rate, and that's how I'll be trading it. If I'm wrong, this is a good area to be wrong from, right? So in terms of where I'm taking a trade, this zone right here, okay, is questionable. The reason why is if we break it, we'll have just gotten above. The back of this zone will be a 4-point extension from the break of the prior day's high. If I were going to take this zone, okay, I'll probably only be taking it at the very back of it, 1852, 1851.75, and it's not an automatic. I need to see the price action in here, okay? And the reason why is if we just break above, we spent a lot of time yesterday, right, consolidating in here. Plenty of time for late bears to build up short positions in here. If we break above this 1848 and a quarter, depends on how much pressure got built up in here, but we could easily blow by here and shoot for this 1854.56 or 59.61. Again, I will be taking shorts in both of these zones. I'm willing to take a loss here, and I'm willing to take a loss here. If I'm going to take 2 stops back to back today, these will be the 2 places I'll take 2 stops because I think they offer me the highest odds for a winning trade. This offers me kind of so-so odds. I still expect a pause. I'm just not certain that I'll get the rotation here. And so again, these are the areas I'm focused on, and then this is a maybe. In terms of the Globex high back of the zone, again, we probably won't have enough rotation. Well, it depends. No, even at 1845, right? You're only talking about a 3-point rotation roughly to the back of the zone. Okay, so this is only if you're taking Globex high. That's only for, and I'm talking specifically to my trading clients, right? If you have an aggressive trade plan, right, and you can accept the loss right here, because realize you take the trade here, and it's probably pretty much going to put you right up in here. As a matter of fact, I need to adjust this ever so slightly. I'm probably going to, well, no, I'll leave it alone. And again, that's why this zone is questionable. It's going to put you right up into this zone for your stop, okay? Make sure you can mentally handle having this stop hit and then not watching it come all the way up here, right? And you'll already be out for the day because you're not going to take more than one trade if you get stopped, okay? If you know it's going to emotionally upset you, if you know you're going to go, that sucks, right? If this is not your trade, don't worry about it, okay? Other trades set up through the course of the day. On the downside, right? First thing we need to have any downside before you start thinking bearish, right, is we're going to have to get below gap fill, which is right here, and our Globex low. Globex low is 1841.50. Gap fill is approximately 1840.50, depending on which chart you looked. TradeStation's weird. On one format they had it a little higher. The other one they had it at 1841 on one and 1840.50 on another. So this is approximately Globex low, gap fill, the whole thing right here, right? We got to get below 1840.50. Okay, really 1842 to 1840 would probably be the whole zone, but I wanted to draw it back just a bit to make sure that we captured the Globex low as well. Excuse me, the gap fill as well. The point of that is, if we can't get below this point, don't get overly bearish today, okay? Even if we open, right, we pull back and we come back up, we've got to get below this point. Also, another thing about this particular area, if I take a trade here, and I'm not certain that I will, okay, and if I do, it has to work quickly. Why? This was the absolute worst area yesterday to place a trade all day long. People just lost money in this thing back and forth. Well, I don't know that everyone did, but most inexperienced traders lose money in this kind of price action. I mean, if you look at it, these are 5-minute bars, and look how they're whipping back and forth, straight down, straight up, straight down, straight up. It's a fantastic way to get your ass kicked. So at any rate, yes, I am not overly eager to be in this area. I much more prefer, if I'm going to take a trade this morning, this area, the edges, right? Okay, or points outward from there. This is the only area I'm truly concerned about. Below, let's look at the area below. Okay, if we break the lows, I have initial support at 25 to 27. I will take a trade at 29 to 31. Okay, so there's a 50-day, I believe, moving average. I don't trade with moving averages, but enough people do that I would expect a reaction at this point. It's sitting right here. Also, you'll notice there's a gap fill just above here. I'm going to consider near 1833. I'm going to consider that tested with this test yesterday. If they wanted to take it, they should have taken it down there yesterday. There's just not enough space between that and here to worry about it. If that gap fill, right, if we come down and we break Thursday's lows, we hit the gap fill and we reverse and we close back above, that would create a potential trap trade anyways, and I have a setup. It wouldn't bother me in that case, right? So I don't need to have the gap fill marked off there because the trap trade would set up back to the upside anyways. And if I took the very back of Thursday's low, it would also capture it within my 2-point stop. So either way, I end up in a win-win scenario there. Okay, so really where I'd like to see the ability to take the first trade is I do expect responsive buyers the first time down here for intent back up. I would scale the 2 points and tighten up your stop, right? If you're going to leave trailers back to the other side. Again, we need the tick and we need to see the price action to figure out if this will break or not. It could just end up being a balanced day. As you can see, pre-market, we really have a pretty tight range. It's essentially just over 5 points. So it's not really giving us an indication as to which way we're going to take it, other than to say this. Prior to this point, buyers overnight have been pretty strong in pushing us back up when we've had down days. That's not been the case the last couple of days. I think that's interesting, an interesting change in price action on the 24-hour basis. So getting below here, okay, I'm probably taking a long, if I can get it, first time into the zone, back near here. I will take a trade here, and I will take a trade here. Actually, every one of these zones I consider viable for a long side trade. What will change my scenario on this particular thing? Open drive lower would change my scenario here, right? So what do we look for on the open drive lower? Now, I know I repeat this every single day, but if people are newer in my room or if you've been around for a while, open drives kick traders' ass severely. So especially new ones. And I'm not so concerned, there are ways to catch it in terms of getting on board with it. However, I'm more concerned about getting run over by it. Okay, so what are we looking at there? Let me stretch this out just a bit. How am I doing on time? 8:09. Okay, good. Okay, open drive lower is categorized by one very large stick down or a series of, usually picture perfect is 3 sticks down. Either way, the first 5 minutes does not get violated. Okay, That is excuse me, the first 5 minute bar does not get violated back to the upside. Inverse if it's the upside, right? Rotations back up are very small, right? Usually 2, maybe 2.5 points. And the tick is predominantly negative when this occurs and stays negative throughout the first hour. In this particular case, if we open below gap, these usually, by the way, occur on gap downs. Obviously, we're not having a gap down today, so unlikely to occur, but it can nonetheless, right? Same thing with an open drive higher on these zones. If we open drive higher, right, 1, 2, 3, I'm going to be cautious in the first couple of 15 minutes to see what the reaction looks like if I identify it as an open drive higher. And importantly, I'll be looking for NQ to lead. Now, I got to say, we've now gone on day 5 where ES has been stronger than NQ on down days. Okay, and we may be having a rotation out of the tech stocks and out of the growth sector into the blue chip sector. If that's the case, things will start to change, and you need to watch for that. But up until this point, I have still seen NQ drag ES down, and I have not seen ES drag NQ up. Until I see that change, okay, I'm going to go with NQ needs to be the leader. I need to see NQ breaking new highs before ES breaks new highs. And I would like to see NQ bounce off lows prior to ES bouncing off of lows, right? In other words, I'd like to see ES setting new lows and NQ not setting new lows. Would be a big clue for me that we're about to have a potential reversal, not the other way around where NQ is pounding out lows and ES is following behind and the new lows are about to come. Okay, so I need to see that formula kind of change a little bit before I change my mind. Now, if all of a sudden I see NQ pounding out new lows and ES not confirming to new lows, and then we reverse, that would be a key. If I see NQ hit new low, ES starting to lead, and ES goes higher and doesn't respond to NQ selling off, and then NQ starts getting dragged up by it, I'll know that the larger formula has changed. But that NQ leading up and down has been the formula since, heck, I can remember now, maybe April or May. Okay, and I'm going to stick with it until I have clear evidence that it's changed otherwise, which means it has to do it for more than 2 or 3 days to convince me. So on open drive higher, if I identify open drive higher, a couple of things. First of all, 9:30 or later are my prime counter trade times, right? So that means I shift automatically to looking where will we be at 9:30. Also, 9:30, whether we have open drive higher or not, 9:30 tends to be the prime time to start reversals between 9:30 and 10, okay? So if we're trading up like this and it's 9:15, I'll wait till 9:30. It might get me to the back of this zone or the front of this zone. Conversely, if we're going down, I'll probably want to wait till 9:30, and at 9:30 I'll look and go, is there anywhere here where I can get a first test into the zone and maybe launch a reversal back to the upside? Also, I want you to be cognizant, in every market we've been in since April at least, this has been the predominant pattern, okay? It either looks like this, and occasionally it looks like this, but not very often. This is least likely, this is most likely on the upside. The upside patterns have been this. Okay, that's comprised 90% of our up days on open drive higher. We haven't been getting this downside portion up until last week. Has been the first time we've had significant reversals to the downside. Again, the easiest times to take those counter trades, particularly on the upside, after 9:30 a.m. It's changed a little bit because we've been getting open drive lower, but this assumes we get out of the gate and we're not driving straight down. After 9:30 a.m. has been the easiest time to trade. You should make that part of your trade plan. Okay. I wanted to go into quickly. I wanted to review yesterday real quick because I didn't do a trade review. I've just been beat, and my goal today is actually to take it quite easy. This is yesterday. Okay, this is failed open drive lower on ES, guys. You want to see what that looks like? Perfect example. And by the way, these were the trend lines stripped away from all the zones. These are the zones here. These are the trend lines that I posted in that meeting yesterday. As you can see, we came right down to it. We got below, which is very common, then shot back above. And then as the day progressed, this trend line obviously held all day long. I imagine you'll want to draw it again because I imagine that's going to be pretty important once again today, right? If we get below it, even if we get into this 30 area on the rebound, if we can't get back below, it could push us lower. Could. Okay? Also on the upside, we have this downtrend line that's coming all the way from back here, guys. This came all the way from the top of this downswing where it started, and we need to get above that downswing, above this line, in order to have any sustained upside. Again, that puts us right in about the 1852 neighborhood right here. Hold on one second here. Okay. This is a picture of failed open drive lower. You'll notice first 5-minute bar, okay, did not get violated for the first 15 minutes. We drove straight down. This is picture of open drive lower, okay, and this is also a rare picture of a failed open drive lower. What are the characteristics? First of all, first 5-minute bar was violated. This does not tell you we're going to swing straight to the other side. What this tells you is trend day down is most likely off the table at this point. Okay. Number two thing that this tells you, in order to have any downside, significant downside, this 1834 has to be violated. Okay, which did not occur. Okay, at least I don't think it occurred in the morning session. At any rate, this can happen. It's rare. Okay. The other thing that I want to discuss is, first of all, it's frustrating missing. I think my entry was 1833.25 yesterday. It's frustrating. I spoke to several traders. It's frustrating not getting your fill. It's more frustrating, but losing money. I missed my fill here, right here, by I think a tick. I think it went right to the ask. I forget exactly at the moment, but I didn't get filled here on the short side either. Okay, so a couple of things about this. I don't mind missing my trades. How am I doing time? I don't mind not getting filled. What I mind is when I'm setting up these charts, my objective is that I'm picking trade location that I have the highest odds of winning, and whoever's trading against me has the lowest odds of taking my money from me. That's what I want to accomplish with these zones when I get entry. Okay, therefore, if I've got to keep my money, even if they haven't paid me, okay, even if they have not paid me, I do not have a hole to dig out of. I'm cool with that. Would have I liked to get hit? Yeah, but what happens here is there's two things going on. First of all, this causes confusion. When you get open drive higher, you identified it, and then it flies the other way, and your mind starts going, what the hell is going on? Okay? You simply have to remain cool and realize the market can do whatever the hell it wants to do. It doesn't have to go open drive lower and continue driving lower. Okay? But mentally, a lot of people feel, I guess, offended, for lack of a better word, that the market's done this, right? First of all, it's prevented them from getting their initial fill, and then it's ripped 10 points like lightning in the other direction, right? And they start scrambling looking for a trade or feel like they've missed something. These moves like this are areas where people have difficulty staying with their trade plan or having a clear trade plan prior to the market open. They overclick in areas like this and they get run over and they lose quite a bit of money in these scenarios, okay? Because they'll short here thinking, oh, it's not going to come all the way back up. Then they see it get up here, right? And they flip, they go, oh, now we're going higher. It means the opposite. And they don't stay disciplined and wait for a pullback. They get long here and they get flushed back the other direction. This is why having a trade plan and knowing exactly where your edge exists is so important. That's all I wanted to go over this morning. Also, if you're a struggling trader, okay, two things. Turn your iPhone on if you have one, or whatever MP3 recorder you have, and record your thoughts through the course of the day as if you were doing an autopsy on the market, right? Talk about the rotation size. Talk about what the market's doing relative to your trade plan and what you are trying to accomplish. Also discuss what your fears are. I'm scared of losing money. I'm scared I can't wait for the zone. I'm scared I'll miss the trade. Whatever that is, if you verbalize those, once you're aware of it and you'll go, yeah, I knew I was going to be scared. But then what that lets you do is, once you're conscious of it, is it lets you shift back to, instead of being sitting there in the fear, focus back to, what does my trade plan say? And I'm going to execute the trade plan. I work on that issue with a lot of clients, and that really seems to help. So that would be the other point. I want to go to the trend lines here real quick from yesterday and look at NQ really fast. Let me pull up my... Here we go. Yeah, Brian, that 930 to the tick. It was They didn't mess around, and that was a hard. I had the order sitting there, and that's a hard order to put in on an open drive lower. I thought it was the right place. I knew that I had that open gap there, and I'll take that trade 10 out of 10 times, and I'll win the majority of the time. So let's look at trend lines really fast. Let me copy this for myself, and let's go to a 15-minute time frame. 9:20. So let's see here. Okay, so original downtrend was right here. Like this, we failed here multiple times, as you can see. I'm going to make that big, fat, and nasty so I can see it very easily. Okay, we have started, and then the other side of that trend line, that channel, is probably right about here. Somewhere right in here. That's the other side of the channel, and as you can see, we violated just below that, but we've held up so far, and we could easily just follow this thing on down as well, moving forward. Okay, the next thing that I want to look at is the more recent one, what that might look like. So I don't know which one it'll follow. I want to watch the price action when it gets around here, okay? So if this is the new one that it's going to follow, that would probably look like, I'm going to go with this right now. Okay, so we have the potential. I'm not exactly sure where this will end up, if I should be doing it probably like this would be what I'd go with, which opens us, as you can see, to get down to this downside down here to initial support. But what that means, more importantly, I'm not so concerned about the downside. That'll take care of itself. Is on the upside, again, we're running into that downtrend line. That one I am sure of. I'm not sure where the bottom of the channel is exactly, but I know that we have to get above this point to make this work. Okay, then we come in a little bit closer on the day. And obviously we have this, and obviously we have this, and we're currently trading 1845, which puts us just above this point. Okay, we held this trend line all yesterday afternoon, especially if you break it down to a 1 minute. We held this trend line all afternoon. We bounced off of it all afternoon long. We have to see, in order to get downside, we have to see this this downtrend broken, and also we need to get obviously this zone's already getting, the bottom of this channel is getting violated already, so it just points out to a general area as opposed to an area that, again, I don't trade specifically off those trend lines. They're just something that I pay attention to. Also on the 24-hour, if we still have it, I was looking earlier, so I'll just pull it up right here. Let's see, where did I have that? Let's just get rid of this. Here we go. Okay, usually I'm not that concerned about the 24-hour, but it's quite clear that we have been making a series of higher lows and now higher highs all night last night. Clearly this is the trend line right here. Okay, we need to violate this to the downside and stay below it in order to break. Obviously, what that's forming is a wedge. If you use the high from yesterday, right, we're getting a wedge forming, and we either, usually everyone goes, okay, well, it's either going to break this way or break this way. It's never that common, but I do want to see if we have a potential trend day up, right? One of the clues would be that this higher low and higher high format won't get violated coming off the overnight, so it's something to watch. Also on NQ, same scenario. Okay, there's the low. Okay, but even with this, we traded sideways a bit longer, but you can see series of higher highs and higher lows throughout. I kind of go like this for the trend line, and we've held. So obviously getting below and holding below 35.60 becomes important. This would be the, I'd go with this as the down channel here. Okay, so it's trying to form a wedge obviously out of the gate and break back up to the upside. So it's possible that we can push early and then rotate back down. I don't think we're in the same screaming market we were in 2 weeks ago. So moves up should be fadeable, but we'll let the market determine that for us. I really don't have anything else, guys. Make sure that you're working your trend lines. Remember that no one trade matters. Okay, it just doesn't. It's a 2 to 4 point stop. Pick your poison, but stand by it. Let the trade work. No one day matters, right? I can tell you in the last 2 weeks, I think I've missed 6 entries that were profitable for in excess of 5 points each. Okay, that's 30 points in my month that has not appeared this month at all. And I've gotten stopped to the tick 2 times, I think, this month. All of that can add to frustration, but I don't let it because I know what my goal is. And my goal is just to stay consistent month by month and week by week so that I can continue building my account. And that's exactly what I've accomplished, not only for myself, but the vast majority of my coaching clients. And so it's something that I'm really proud of, and it really takes me out of making any one day important. Also, don't stare at the screen all day. Take some breaks. It's hard concentrating for 8 hours, and it increases the odds that you're going to make a trading error. Take a break somewhere in there. Anyways, it's 8:26, guys. Hope I covered everything well for y'all. Have a great day. If you have any questions, you can hit me. And at any rate, we'll talk later.